Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments on the live feed below. If you need any more information or advice, please join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During the live session today, we'll be running a poll, so please do engage with that and I'll reveal the results towards the end. So for those of you who haven't seen me before, my name is Judith Dugdale. I am a chartered accountant and I'm based in the northwest of England. I work at a firm called MHA Moore and Smalley, which is a large independent firm of chartered accountants and business advisors. We cover Merseyside, Greater Manchester, Lancashire and Cumbria. And as you would probably expect from a large firm of accountants, we provide all the normal accountancy services such as tax planning, tax return completion, annual accounts, audits, but we offer some extra services that you might not get from every high street accountant, including strategic planning, wealth management. We've got a team of independent financial advisors to help with investment and pensions advice. We do outsource payroll, outsource bookkeeping, and we have a really good team of corporate finance managers who help our businesses that are wishing to grow through acquiring extra funding, but also helping them sell their business when they're ready to retire or buy other businesses to help them grow. My role within the organisation is I am head of digital solutions, and loosely put, that means I look after a bank of clients that all use cloud accounting software like QuickBooks Online. We've been with QuickBooks Online for probably 6-7 years now, and we've got over 1,000 clients on our books that use the software. The team that I head up, we're split into two areas. We have the ongoing compliance and support area, so that's where we look after clients in terms of doing management accounts, doing VAT returns, year-end accounts, tax planning, looking at ways to help them get the most out of the money that they're making and help them drive their business forward. But then we've also got another arm, which is where we do a lot of software support. So that can be working with clients that don't have any bookkeeping systems in place that are computerized. So they might be using manual records, or they could be using Excel, or alternatively they use an old desktop piece of software that's no longer supported or no longer fit for the purpose they need. With those businesses, we help them to identify the best bookkeeping solution for them, and then we set that up and we offer ongoing support to those clients. Obviously today I'm happy to answer any questions you might have, be that around the software itself or around general business advice or accountancy advice. But before I get into asking any questions, I just wanted to run through some of the work that we're doing at the moment. As we come always in March, we are looking at what we can do to help our clients that have March year ends. So we have an awful lot of limited companies that have March year ends. We've also obviously got a lot of self-employed, sole traders and partnerships who have a 31st of March or a 5th of April year end that ties into the tax year. And on top of that, this year, we've obviously got an awful lot of businesses that are looking to reopen after being shut for a period of time due to lockdown. So from our point of view, it's time to plan. In February, March and early April is planning time with our clients to try and make sure that they can achieve the most that they can in the next 12 months. So I just wanted to run through some of our top tips that we do. So we have 3 main tips, which are to budget and project, to review personal circumstances and any tax implications that will come from those personal circumstances, and finally to perform a digital review. So just looking at those in slightly more detail, the budget and project, I think I've spoken on here before about how we advise a lot of our clients to do rolling 12-week cash flow forecasts within the business. And this is sort of a slightly step back approach to that. So what we're saying here, instead of having a very detailed what's coming in and what's going out over the next 12 weeks, the budget and the project work that we do every March with our clients is to actually look at the whole picture for the next 12 months. So if you use QuickBooks Online, it's it's so much simpler than it used to be when people were on spreadsheets or on desktop pieces of software, because we as your accountant can interact with our clients, and we can make sure that we're really looking at live information. So as long as the information in QuickBooks Online is up to date, what we do with our clients is we sit down and we run off reports that show how much turnover and their expenses that they've had in the last 12 months. And you can break it down month by month, week by week, if you wish to. And then we sit down with those clients and we decide, do you think the same level of sales are achievable for the next 12 months? Do you think you could do more? Or do you think actually you're going to be a bit hampered, particularly say if you've been a business that's been shut for a while due to lockdown, is it going to take a bit of time to pick that back up? And then once we know where they think they're going to be in terms of income, we can then look at their expenses. Are they going to have to spend more in terms of maybe website work if you've pivoted to be doing more online sales? Is there going to be more postage and package than you've had before? Are some of the motor costs going to increase or decrease? And obviously there's been a big shift for a lot of businesses where people are thinking of continuing to work from home where they can in the future, even when we're allowed to go back into the offices. So that might mean saving some costs on your overhead utilities, rental costs, heat and light, that side of things. So it's really, really good to look at that. And you might well need to go back the 12 months before that, when you had a full year of being open and in operation, just to remind you of how some of those costs were higher at that point. Reviewing personal circumstances and tax implications. This is a really, really bugbear of mine that people just leave it. And it's really important to know where you stand in terms of liabilities that you have within your business or personally. So I would say, particularly if you're one of those businesses that's been shut and you've not quite reopened yet, or you are literally going to come through to a start in a new tax year anytime soon, please try and get your QuickBooks information up to date as quickly as possible, so that once you go past your year end, you can send that information off to your accountant and they can pull together your profit and loss and look at what potential tax liability you could have. We recommend with our clients that they put 20% of their income to one side if they're a company to help towards their corporation tax bill. And depending on how much money they earn, if they're a sole trader or a partner in a partnership, we tell them a percentage of money to put to one side. If you can get all your records up to date, the accountant can then calculate what the tax bill is going to be for the forthcoming year, which will mean you will know really early on if you need to put some extra money to one side, or maybe you've actually managed to reduce your tax bill through things like pension contributions, or you've invested in capital items. So I think in an era where everybody is really focused on driving forward now, then we really need to know what those liabilities will be, so that if you have actually got some excess cash, you can invest that back into your business to help drive that growth forwards. And if for whatever reason you've not managed to keep that money to one side because of cash flow issues, because you've been shut, then at least you'll have a good 7, 8, 9 months to put that money to one side, so that when that liability arises, you will have that money there, so it doesn't impact your business at the time it falls. And then the final thing that our top tip at the moment is to perform a digital review. Now, we've never really done these or pushed these too much in the past, but this year we're really starting to focus on them. For those of you who haven't come across a digital review before, this is where we look at your QuickBooks Online software and interrogate how it's being used by you. And by doing that, we can explore all the different features within the software and see whether you're making the most out of them. The idea behind cloud accounting and QuickBooks Online is that it saves you time. And what we regularly see is some businesses that embrace all the different features within the software, and their bookkeeping time is so much smaller than it ever used to be. But we constantly see people that aren't aware of all the features within the software, and therefore are not making the most out of them all. So a digital review will check which features you're using, and then at the end of it, we will propose ones that you could use that will further enhance your experience. But also we will look at different features you might not even be aware of. So for example, you could be a plumber or an electrician, and you might well have lots of different income lines for the different work that you're doing, and then lots of different cost lines relating to those income lines. Well, you could turn on projects within QuickBooks and track each individual customer project to work out whether you're making money. And that's where the software can really, really benefit your business, because if you can get the detail out of it, which shows you which services make money and which services don't make money, you're able to make proactive decisions within your business to make you more money. And furthermore, hopefully save you a bit of time. And that extra time, you can either invest that back into your business to further help find that growth and push that growth forward, or you could use that time to spend at home with your family and your friends, whichever way around you like, but you're in control. So the top 3 tips I have, just to recap, are to budget and project for the next 12 months, review your personal circumstances and look at what the tax implications are in terms of tax bills coming up and profitability within your business, and then perform a digital review so that you can enhance what you're doing in the next 12 months instead of doing the same thing over again. So I think that's enough of me talking about what we're up to. I'll start to take some questions. And as I said before, please feel free to ask anything and we'll do our best to answer those today. So the first question has come in, Gord from Twitter DM. And this says, is it a good idea to keep personal and corporation tax money aside in a business bank savings account? Gord, absolutely. This is something that when I see an awful lot of new startup businesses coming to see us, asking us about, should I be a sole trader? Should I be a limited company? What sort of records do I need to keep? And one of the things we always tell people is, start to put aside any personal tax if you're self-employed or any corporation tax to one side. We also actually recommend you do it for VAT money as well. Now, not everybody is VAT registered. You need to turn over £85,000 or more to be obliged to register for VAT, although some people do voluntarily register. And that's the same principle. The money that's coming into your account that is generated from sales, if you make sure you put aside a percentage of that every month into a business bank savings account, then it's sat there ready, and your tax bill should never be more than that percentage you put aside. So, for example, if you're a limited company, we would say put 20% to one side. At the moment, the corporation tax is 19%, so you're always going to have enough money in that savings account. Obviously, in the future, tax rates will, we know corporation tax are going to go up, but not for another 2 years. So if you're a company, putting 20% to one side should mean you've always got enough cash flow there to pay any tax bills that come. Next question is Sylvan, Instagram direct message. Sylvan says, hi Judith, how much should I take as a salary from my limited company? I set up my company the other month and I haven't got an accountant yet, so trying to navigate it all myself. So Sylvan, the first thing I would say, and it's probably not what you want to hear, is if you have just started trading as a limited company, I really recommend you get an accountant. Being a director of a limited company brings with it a whole host of legal requirements that not everybody is aware of, whereas your accountant can steer you in the right direction. In terms of taking a salary from the limited company, you can take whatever salary you want out of that company. What you may be trying to get me to confirm is whether if you're going to take a salary and dividends, what's the proportion that you should split it so that you pay the least amount of personal tax. So what you need to do, and I don't know your other income that you have because that impacts on what salary you should take. But roughly speaking, we usually recommend that a director of a company takes the lower earnings limit of the national insurance level. So it's about £8,700 at the moment. And you take that over the year. And then anything else that you want to take out the business, you take it as a dividend. What I would say is a new company just set up, you need to be really careful about structuring yourself in that way, because you can only take dividends if you've made profit after corporation tax. So that means your income less all your costs less things like depreciation if you've got assets, less your salary that you've already taken. You calculate the profit that is left after that, knock off your tax, and whatever is left is what you can take as a dividend. You can't take more than that. So what quite often happens with new businesses, particularly if they may well not make a profit for a while, or they're just going to be break even for a period, you maybe need to take more as a salary, because you can take a salary when you're not making profit, but you can't take dividends. And this is where it's really important to engage with an accountant and get that advice that is specific for you and your business. If you're using QuickBooks Online, there is the Find the Accountant tool within there. And if you put in your area, it will come up with a whole host of accountants that specialise in QuickBooks Online. And you'll be able to get in touch with one of them. They will all, I would imagine, we definitely do, and I know most of our competitors do, will give you a free, no obligation meeting to go through some of those things. And then you can see maybe a couple of different accountants and choose who is the best for you. And don't just go on price, go on the value that you think that they're going to add to you. Because having a really good accountant is the difference sometimes between your business being a success and you achieving your goals and not doing. The next question is Samet from Facebook Messenger. And this question is, hi Judith, what is the annual cost amount I can claim from working at home through a limited company? So HMRC allow you to claim a set proportion per week for working at home, and that's meant to cover a bit of the gas, electric costs that you have when you work from home. It used to be £4 a week. And then to reflect the fact that people were having to work from home more, from the 6th of April 2020, it changed to £6 a week. So that money you can claim tax-free as a deduction in your limited company. If you're a sole trader partnership, you can claim it as a deduction against your income. Now you can, if your circumstances are different in terms of you've got a lot higher costs than that, look to claim a little bit more back. It's a bit more complicated. What you would have to do is record all your heat, light, gas bills, that type of thing. And then you can work out the proportion that is related to running your business from home. So for example, if you have 6 rooms in your house and one of them is a dedicated study, you can claim 1/6 of your heat and light costs. And that might well be more than £6 a week. You have to be careful. You need to make sure you keep all those bills as proof of what it is. And again, your accountant can help you with that. You can put that through the business and you're owed that money back. I would suggest that I would be really cautious doing that if actually you don't have a dedicated room, because that's the whole point, is that it is actually an office at home. Whereas the £6 a week is just for anybody that is having to work from home for any period of time. And you don't have to be 100% at home for that either. You can maybe just work from home one day a week or one day a fortnight, and you can still claim that £6 a month. The next question is Victoria from Facebook Messenger. Victoria says, good morning. You said investing back into the business is a good idea. Can you please talk about some different ways that I can do that? I've set aside some of the corporation tax, but haven't traded as much as usual, so I've had to use some. So Victoria, the fact that you've put aside some money for your corporation tax bill is fantastic. Now, I know you're probably worried that you've had to use some of that money, but don't panic. There are people in far worse situations who never put any money to one side. So actually, they're really struggling now if they have had a period of low trade and low profitability. You had the foresight to put some money to one side. Worst case scenario is when you do get your corporation tax bill, if you don't have the monies to pay it immediately, then definitely ring HMRC as soon as possible, and they'll be able to put something like a time to pay plan in for you so that you can pay that corporation tax bill off a period of time. I wouldn't panic that you've had to use some of that to help your business come through the next few months. In terms of different ways of investing within your business, there are a couple of ways you can do that. So the first and the most easiest way is you just don't take as much money out of the business. So you may be used to taking, say, £5,000 a month out of your business. Investing back into your business for you might mean that you only take £2,500 out of the business, and the other 2.5 you would have taken goes into buying assets or buying new equipment or funding things like a website or marketing tools, that is investing back in your business. The other way to invest into your business is maybe time. So instead of having all your weekends at home with your family or your friends, for example, you might decide to invest more time into your business. That's a way that people often forget about investing in their business. They do it automatically and they forget that actually that's a sacrifice. And I know the poll today is about what we sacrifice for employees. And please don't forget that it's not necessarily monetary an investment or a sacrifice. It quite often is time. Because any time you're taking away from doing something else is an investment within your business. And then the third way of investing in your business is maybe looking for some third-party finance. So that might be getting an overdraft from the bank. It might be getting a loan from the bank. It might be getting invoice discounting. It could be getting some stock financing, some hire purchase financing. So yeah, it's either not taking out as much money, getting a third party to lend you some money to put into the business, or it could be just actually putting more time into your business. So good luck, and I hope things pick back up for you. Moeen from Instagram direct message has asked the question that I became a sole trader at the end of January 2021. Now that we're beginning a new tax year, is there anything I need to submit to HMRC for the period between January and now? Well, congratulations on setting up your business. I really hope it all goes to plan and you get that freedom of working for yourself. Well done for getting it all set up. I'm not sure whether you'll already have done this from your question that you've asked, but make sure you register with HMRC that you set up as a sole trader stroke self-employed. It's really easy to do. If you go to the gov.uk website and type in register as a sole trader, it will come up with a link. And at the moment, all you need to do is just register for that. And what that means is you'll get what we call a unique tax reference number if you haven't already got one. And that will enable you to do your self-assessment tax return next January. So you can do, you do a self-assessment tax return by the 31st of January every year. And your tax year, if you're self-employed, a sole trader, runs from the 6th of April to the 5th of April. Now, if you started in January, you're going to have a very small period. You're going to have January, February, March, and a few days of April, which will go on your what we call the 2021 tax return. So that needs filing by the 31st of January 2022. You don't need to do anything else other than register. If you haven't already registered as self-employed, you ideally should do it within 3 months of starting your trade, but at the very latest, it needs to be the October following the first completion of your tax return. So you must have registered by October 2021. But as I said, I would get on there and register early. But apart from that, there's nothing else you need to do now until you've collated how much money you've made between January and the 5th of April. And then although the return is due January 2022, you can file it at any point once you get that unique tax reference and you're into the next tax year. So good luck with all that, and I wish you well. Dita from Twitter direct message. Dita says, hi Judith, I lost my job due to COVID and I want to start a side business. Should I go as a sole trader or a limited company? Can you backdate startup costs? So a couple of questions there, Dita. Setting up a sole trader or limited company, I get asked this all the time at the moment because there are loads of people setting up little side businesses, or because of COVID, they've lost their normal full-time job. So it is a question. We're seeing loads of people setting up new businesses every day. And my answer to whether you're going to do it as a sole trader or a limited company really depends upon the risk and what it is that you're doing. It depends on the suppliers that you're going to be working with. It depends on the customer base that you've got. And it depends on whether you're having to rent property, if you need some units maybe to store assets. If you are, let's say, going to be doing almost like a consultancy type role, so there's just yourself, you've no real stock to purchase, and you're not having to rent any premises from somebody or take on any finance, I would say to start with, do it as a sole trader. There is a lot less bureaucracy around trading as a sole trader. and it will be a lot cheaper in terms of accountancy fees to start with. However, if you were, say, going to be, I don't know, setting up a website and doing online sales, and you're having to buy a lot of stock in from abroad or from the UK even, and you're holding a lot of that stock, and you maybe need a unit to store that stock in, you've suddenly got quite a lot of ongoing costs that you're committed to meeting. And in those circumstances, you may be better trading as a limited company, because that affords you what we call limited liability. And what that means is if something goes wrong within your business, the limited liability means that you personally are not liable for any debts that are left within that organisation. So let's say you were having to rent some property, you're buying loads of stock, you get going and you're selling online and everything's going brilliant. And then all of a sudden, I don't know, there's a change in how you trade, like a legal change. There's nothing you can do about it, and it stops overnight what you can do. You then have a load of bills to pay, but you've got no income. If you were a sole trader, the suppliers would come to you for that income. If you're a limited company, they come to the limited company. The limited company is a separate entity to you as an individual. And therefore, if you can't pay those bills as a limited company, then the company goes into liquidation. And unfortunately, the suppliers will lose out on that money. If it was you as a sole trader, the suppliers would come after you personally, because effectively you're guaranteeing that business. So it really does depend on what business you're going to do. In terms of backdating startup costs, anything directly attributable to your business, and you can prove that it was attributable to starting your business, be that buying laptops and other bits of equipment, or be it stationary costs and advertising costs and setting up websites, they should all be details kept. And yes, you can include those as part of your startup costs. The next question from Shusmita on Facebook Messenger. She says, good morning, Judith. Can you help me understand what cash-based accounting is and how it would benefit me to use it for my financial records? Yes, that's fine. So cash accounting is where you account for your income and any costs as you pay for them. It really is a really good way for small businesses to account for their income and expenditure. And effectively, it means you only pay tax on your profits that you've actually received the cash for, or you can only deduct the costs that you've actually paid for. Some businesses will use what we call accruals basis, and that's that your income and expenditure is based on invoices you've raised and invoices you've received that haven't necessarily been paid. So definitely for a small business, I would recommend that cash accounting is a brilliant basis to start on, and HMRC are quite happy as long as you tell them which basis you're using. They're quite happy for you to use cash accounting. So I'd recommend that you go down that route as a new business starting up. So I'm afraid we've run out of time now for any more questions. What I did just want to reflect on are the poll results. So the poll was, have you ever sacrificed anything for your employees? And today's poll results actually say, and I'm really surprised that 100% of you said no, you've never sacrificed anything for your employees. And I think this comes back to maybe what I was saying before about investing in your business. I wonder whether people forget that sacrificing stuff for your employees doesn't mean giving them more money. It could mean that sometimes you take less salary so that you can pay them. It sometimes means that you give them more hours so that actually you end up making a bit less money, but you're giving them the hours to give them security. And it could be giving them, doing more work, and the time it takes to train them. So I'm really surprised that nobody thinks that they sacrifice for their employees. I know from my clients that I deal with, people do it all the time without even thinking. So don't be so hard on yourselves, and just reflect on what you do for people that work with you. And I'm sure you'll find that actually you have sacrificed quite a bit. Thanks very much for your questions today. If you have any further questions, please get in touch with the QuickBooks support team on Facebook, or you can contact me at Moore and Smalley using the email address digitalsolutions@mooreandsmalley.co.uk. I'd be delighted to help you with any questions you might have. If you want to find out more about our digital reviews or have any other questions, then pop along to our website, www.mooreandsmalley.co.uk. We've got loads of information, including lots of insights and videos and blogs. So yeah, go and have a look at those. Coming up on Ask the Expert tomorrow is Jeff Lynn, chairman and co-founder of Seedrs, one of the largest equity crowdfunding platforms. Tune in to get tech genius advice on successful crowdfunding. Don't forget to join the official Intuit SMB group on Facebook and also register for QuickBooks Connect if you can. Have a good day, everybody. Thank you.